Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, November 25th, 2019 edition of DecisionPoint with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. We hope to have you back. We do air Mondays at 3 p.m. Eastern each Monday, so do join us. And of course, for our regulars, welcome back. All right, so let's go ahead and get this party started, as they say. How you doing up there, Dad?
Oh, a little distracted from Thanksgiving prep.
Yeah, I hear you. Trying to straddle both those lines right now, getting ready for that, and of course, watching the market carefully at the same time. It's going to be an interesting one, I think. I was kind of thrown that with the market action today, but it seems to happen to me almost every day these days. All right, well, let's go ahead and look at the agenda. We're going to go over the broad markets. We'll look at the DecisionPoint scoreboard. We'll also take a look at the sector scoreboard, and I'm going to actually zero in a little bit more on the sectors. We will look at the Golden Cross and Silver Cross indexes for each of the sectors. This is, of course, the new DecisionPoint indicator that we just unveiled, the Golden Cross and Silver Cross indexes. You can get more information about that chart list. If you would like to download that chart list, just go to your account, and you need to download the free DecisionPoint Market Indicator Chart Pack, and that's where you're going to find the chart list with all of these indexes as I'm going to show them to you. Of course, we'll go ahead and Carl's going to look at the S&P 500 and the indicators for that. And then we will also have the grab bag, of course, at the end of the show. So you can see what charts Carl has been finding interesting over the past week. All right, so we're going to go ahead and get it started. I will show you the DecisionPoint scoreboards to start us off. And as you can see, no changes at this point. Everything is still pretty much in the green. We're waiting to see what's going to happen with these monthly PMO signals. I'll have to take a look at those monthly charts and see how close we are to switching those up to buy signals. This would, of course, be on your monthly chart, and it is the monthly PMO, and we watch where it goes in terms of its signal line. And currently, as of November 30th of 2018, so we're talking about a year ago, that's when these sell signals did come into play. All right, let's go ahead and look at those broad market indexes. And here we are, as you can see, big gap up today and did close on the high for the day. It looks like we're headed that direction, much higher, another new all-time high. If you look at the equal weight, we also saw the same kind of action as well out of RSP, and we are setting a new all-time high there as well. S&P 400, we're not quite to the all-time highs that we saw back in September. Same goes for the small caps. You can see we're still trying to punch up there, at least with the mid caps. We're trying to make a good try at it. Not quite there yet to new all-time highs. And of course, the small caps are lagging well behind the rest. Although looking at today's action, certainly a great day on the S&P 600. All right, I am going to go ahead and pass it back to you, Carl, to look at the S&P 500 and our DP indicators for that, and then we'll hop back over to my screen and we'll look at some sector stuff.
Okay. Okay, today, see new all-time highs. We've been in a fairly narrow rising trend channel. PMO is back to rising, and volume picked up rather well today. We've had three touches or almost touches of the top Bollinger Band, and the last one happening today. So this is telling us to watch out for a short-term change of direction at least. Don't need to look at that one. Let's go into the here's the gold and silver cross indexes for today Make a note, Erin, when
Mm-hmm.
this is a 7140 for the S&P 500, when you get to covering the Silver Cross for the OEX, we'll see a difference,
Okay.
which I wanted to point out. Basically, this is lower than it was back here, but it's still plenty adequate to have 70% of your stocks in the index on buy signals. Intermediate term buy signals is quite substantial still. Climax wise, had an expansion of new highs today, but you're still they're still contracting over this monthly period. I would say it was climactic on the breadth today, but not the volume, because volume was again low. The short-term indicators, STOB and V, are still trending downward. Actually, they've gotten to about neutral on the zero line. The reason being is the upward momentum here is getting, in this short term, is kind of slowing down, and we're not getting any serious breakdown with stocks above their 20 EMA. Percent PMOs rising. These are both from Friday, unfortunately, but they just don't update this early. Medium-term indicators. Well, we got them turning up again today, but they are below their signal line, the ITBM and ITVM. Not anything especially problematic.
Mm-hmm.
Here's one that we don't usually cover, but percent of stocks above the 20 EMA, 50 EMA, and 200 EMA. Notice that before the 2018 top in January, they were moving sideways, got no warning. In the late 2018 top, you had deterioration all across the board. And same thing on these two tops here. Now we're getting very steady moving across, and although these aren't as high as back here, we're not getting any oscillation, somewhat like we had in here. So we could be heading higher for if something like this, maybe continue on like this, but although we're really getting steep here, so possibly something like that. And if it does happen, I would be looking for it to peak out around the end of the year, which is not too hard to guess. Okay, did you want to take it back now for the?
Yeah.
Okay.
Let's go ahead, and I'm going to look at, let's look at the sectors here. Hold on here. All right. First, I want to show everybody our scoreboard for the sectors. So actually, that's the wrong one. I didn't get it in here correctly.
No,
this is actually
still a neutral, isn't it?
Yeah, utilities is a neutral. I don't have, I set it up and then I didn't put it in the PowerPoint. But yeah, we do have a neutral on XLU. As well as real estate. This means that the 20-day EMAs are below the 50-day EMAs. So no longer on a buy signal, but we don't put a sell signal in place if the 50-day EMA is above the 200 when we do get that negative crossover. So neutral, we consider, you're either fully hedged or in cash, or you can consider it a soft sell signal. So let's go ahead. I want to go ahead and show you that the candle glance that I have of all of the sectors. And of course, the S&P is over here as well. I am going to tighten this just a little. There we go. Okay, so what I'm looking at on these, of course, these are mini charts. They have the 20, 50, and 200-day EMAs on it. And then, of course, the PMO is on the bottom. So this gives us a really quick look at, number one, price-wise, what's going on with all of these different sectors. But also it tells us momentum, what is going on there, and, of course, the trends by looking at the trend models. So, excuse me. Some of the interesting things to note, I noted that with the materials sector, we did get a PMO sell signal. We're not seeing that much deterioration yet. And honestly, I'm looking at that bottom is just hit right on that support level. So I think there's still an opportunity for materials to move up higher. But that is a warning signal to see that sell signal come in on materials for the PMO. Here you go with utilities, and you can see it's been, I'm going to actually click on this one so we can look at it a little more closely. We've been consolidating after that big rally move that we saw a little over a week and a half ago. And at this point, we are looking at a PMO buy signal coming in. And you can also see that the 20 and 50-day EMAs are really, really close to each other. I think at this point, we're lucky we haven't gotten a lot of whipsaw signals there. But if we can get that breakout, maybe we're looking at a little mini bull flag here that would suggest a move up to the tops that we saw back here in September and October. But of course, a lot of that is going to be dependent on what's happening in the market as a whole. So let's go ahead. I'm going to show you these golden cross, silver cross indicators very quickly here in what I have down. Where did I put it? There they are. Okay, so that's the S&P 500, which Carl just talked about. But this is the new chart list that you can get in the DecisionPoint Market Indicators chart pack. And as you can see, we have the golden cross and silver cross indicators for not only the major indexes, but also for each of the S&P sectors. So I'm gonna grab onto the utilities one first, and then we'll just click through very quickly to get a feel for what's going on. And Dad, feel free to interject here anywhere you'd like.
Okay.
All right, so here we have that utility sector, and you can see that we did have some warning back here that things were not as healthy here in the utilities section when we started to see that silver cross index moving not only lower, but below its signal line. We've got a top below the signal line now. You can see golden cross right now is deteriorating as well. But ultimately, you've got 85%, more than 85% of the utilities components that do have their 50-day EMAs above their 200-day EMAs. So we're starting to see this deterioration in the longer term as well. And I would not like looking at these declining tops on the stocks above their 20-day EMA. So we're getting less and less participation.
Let me just comment on that, if you would. The one thing to remember is that when right now the utilities silver cross is headed lower since the end of September, and but so is the index. So this is showing the severity of the movement, but it's confirming. So it really doesn't tell us anything, since it is confirming and saying yes, it's getting weaker.
Right. There's still there problems.
Same before that utilities top from August to October, the silver cross was rising, but so was the market. What you're looking for is prior to these tops to see
whether we got some warning.
But yeah, what is movement that is not confirming price. And this really, I can't see anything that stands out right now.
All right, so let's click on through. Here's your technology sector. As you can see, still looking pretty healthy. We did get a drop here on the stocks above their 20-day EMA, but we're still over 50% right now in the technology sector. And ultimately, we're getting some confirmation, as you were mentioning, on both the gold and silver crosses for that sector. Now this is the one, real estate, you can see that 20 is below the 50, so that's why it's at a neutral signal. Again, you can get a inside look at what's going on within this sector as far as, you know, we had that negative crossover here on the Golden Cross Index, but exactly as you said, Dad, this is really, we're getting that confirmation that there are problems here.
Here's a perfect example of what I was talking about, not confirming. Notice the silver cross at the beginning of October, it hit its top and it started downward, whereas the index itself moved higher during that same period. So there's a non-confirmation or a negative divergence that's telling you something that it's getting weak and watch out.
There we go. Materials. And you can see that flattening out right now, right before that drop. You go right there, see?
Right.
And XLI, the industrials. Look at this, we have almost 90% of the components above, their 50 is above their 200-day EMAs right now in the industrial sector. Very interesting, and climbing pretty much. And then here is healthcare, obviously definitely a strong performer right now in the market. And then here we go with the financial sector. And you can see really we're getting that confirming action, that straight across action here as we were getting the consolidation here for the financial sector. Again, I'm looking at this, I could see a possible flag forming, but I don't like seeing this turning lower as prices are starting to move higher. And then there is energy for you. It's been a rocky road for energy over this past year. You know, you can see the declining trend that started back in April and continues into it. But we are starting to see now. What would you say about this move? Like we're getting right here to the upside. You could see as we were going down, even right through here, we were seeing this flatten out. Both of these flattening out.
Yeah, I'd say that's a positive note for sure.
Mm-hmm. All righty, consumer staples. Certainly it's flattened out as the market has continued higher. Not a big surprise. This is typically the sector people go and join when they're feeling nervous. Tends to hold up a little bit better in a bear market. Of course, it can be drugged right down with the rest of them. But right now it's looking pretty interesting here. I'm seeing that move to the upside here, and we did see a little bit of decline.
But ahead of that, you notice it was really deteriorating actually so far back as the highest top being in well, March, we'll say.
Yeah.
May and then August and the next top. But it kept dropping lower and lower. So
yeah. Another good warning. I think that's, no, we've got two more. XLY, and there you go. It's been moving mostly sideways right now, but you can see that we're starting to get more deterioration. And finally, the XLC. And yeah, I don't think there's too much here. Look at that move on the Golden Cross, though. That's really interesting.
Yeah, that's one of the things is that some of these sectors don't have that many stocks in them. I mean, I don't know exactly, but maybe there's 20 in this. But you see how the Golden Cross is real jerky?
Yes.
Blocky looking. And it's just because there are so few stocks in there. When one of them moves, it's a jerky.
Yeah. Well, and really, you can sometimes see that with some of the Dow components, where it's not the 600. Right there. Yeah, since you only have 30 components, it does tend to get a little bit blocky here. All right, well, that was my look through the sectors. Leaves you about 8 minutes or so. Let's talk about what charts are piquing your interest right now.
Okie doke. Okay. Start down. That's not the one I wanted. Let's try the advanced decline line. It was something I wanted to talk about on this last week, but we had technical difficulties. But this is a venerable indicator, advanced decline line, and it's pretty good. But I rarely look at it because we use the advanced decline information and grind it up into other indicators that are really the primaries. But one of the things that is bad about the advanced decline line is it can be skewed because of the way it works. For example, let's say you have a stock that moves up 1 point for each of 3 days, and then on the fourth day it drops 6 points. Well, your net advanced decline on that move, or those moves, is +2, whereas net price is -3. So the advanced decline line didn't give you any warning. I'm just showing if you imagine this on a much larger scale, it's one of the ways you can get in trouble with the advanced decline line.
Mm-hmm.
And I'm not sure if we've talked about this recently, but Apple, it's on another parabolic move, and this is something this stock does, and here we have, and then it pulls back. It goes way up and then it pulls back. Last one being a 40% down move. Incredible. It's hard to fathom that. But here it is. It starts going vertical again. Just watch out. I mean, if you bought it back here, you don't care, because it's never coming back here. Well, not in my lifetime anyway. So I can remember when we wondered if Apple was going to make it at all.
I know, I do remember.
Yeah, it was a really scary time for a while there. Then they invented the iPhone.
Everything changed. That is quite the move to the upside there, though.
Yes, definitely.
And what I tell a lot of people too when they're investing, if you did get in on this move a little bit later, excuse me, is consider a trailing stop. You still get to take advantage of all of that parabolic move, but it does protect you all the way on the way up, because that stop keeps moving with you as it goes up. And so I find it to be a really good protection on parabolics. Keeps me in, but then also gets me out before it's too late.
You see, I gauged it. It's 94% move since this low. It's in less than a year, it's gone up 100%. So it's going to correct back, and just be ready for it and have your plan of action in your head before it does come. And this is an interesting TD Ameritrade. We just found out that Schwab is going to buy them. I don't know if you've heard that news. But the interesting thing to me is I started out with Schwab way back when Schwab was the only discount broker. And,
right.
Yeah. And at the time I was playing options, and in order to get my quotes at work, I had to dial in on an 800 number and get the quote. It was a automated system, but you still had to dial in. And I was doing it maybe 10 times a day, and the manager of the Schwab office called me and chewed me out for making so many of these 800 calls. Using up their budget, I guess. So anyway, I left Schwab eventually. I went to Scott gotten into Scottrade and stayed with them, and they were bought out by TD Ameritrade, and now Schwab's buying.
You're back to where you started.
Here I'll be back with a Schwab account. But notice this is, by the way, this drop was when let's see, Schwab and one other said they were going to get rid of their. Well, no, that was TD Ameritrade, and Schwab said they were dropping their commission charge totally. It was $4.95, and then it's going to be zero from here on out. It is zero, and but on that day, the commissions meant a lot more. I think it was 20% of Ameritrade's revenue, so it meant a lot to them, and that was when everybody bailed. Now we have the perfect island reversal here, just really perfect. And here we got the jump when the Schwab purchase was announced, and interesting to follow that.
Yeah, and now we're back almost to where we were, a little higher.
Right, right.
I guess the question is it going to continue higher?
Yeah. And I remember we talked about Beyond Meat back here, on this day where we had this uptick, and it looked like it was probably going to bottom the very next trading day. It dropped down here, and now it's just chugging along. Maybe we'll see another reversal here, but that's not a prediction, just one of the possibilities. But it's, you know, it's dropped 70% since the hit the top.
Yeah, that's a
yeah,
pretty big hit. And right. I know a lot of people will ask me about, you know, the fact that the PMO doesn't have huge amounts of data there. I still pay attention to the crossovers, but I'm not quite as concerned with the values at the beginning.
Well, you're saying that, like, well, it starts out about plus 25.
Yeah.
And a minus 15. Well, it moved a lot. You can get those kinds of moves. You don't see them often, but the yeah, you can get very high readings on the PMO. Well, with a stock, you know, you'll never see this with a stock index, a major,
right,
market index. But this is definitely something you can see.
Mm-hmm.
Okay, we had
one more chart.
Okay, we had a question from somebody about the yields and what did I think they were going to do. As long as they don't change the if the Fed doesn't change the rate, it should be stable. But they can get news that would cause people to run into bonds or to run out of bonds, you know, other than interest rate change by the Fed. So that is another thing that can drive prices is news that affects how bond traders are going to move in or out.
Mm-hmm. Well, that does pretty much wrap it up. That was a very quick half hour, I have to say, as it usually is. Be sure, everybody, to join us again next Monday at 3 p.m. Eastern. And do check out that DecisionPoint blog. Lots of great information in there as well. Have a great day and happy trading.